Hey, what's going on YouTube? It's me, JC, here again in the second season here at Wedge Concepts. And in this video, I'm going to discuss the importance and how to build that banking relationship so you can get that first credit card. All right, so let's get right to it. All right, thank you for checking out my channel. Thank you for sliding through. And in this video, like I mentioned, I'm going to be discussing the importance of the banking relationship and how you can use that to get your first credit card or to get another credit card. Hey, what's going on? I had to interrupt the video to let y'all know about my book, Broke Budgeting. Okay, it's on Amazon, 5 Simple Strategies. Okay. The link is going to be in the description. Make sure you pick up a copy. I have a Kindle version as well as a paperback. All right, let's get back to your video. So let's give the backstory, right? The banking relationship, what I mean by that is that, well, let's look at any kind of relationship. The relationship with your bank, the relationship you have with other people, the better relationship you have, the more they're going to trust you, right? And so I went and got the definition of a relationship, and it is the way in which two or more concepts, objects, or people are connected, or the state of being connected. All right. So within each bank, there's going to have your relationship bankers. They're sometimes just referred to as a personal banker, right? Now, they're going to act as a financial advisor. They want to make sure that they keep the relationship going with you guys, that they're providing the services that you're looking for, that they're meeting your needs. Okay. And there's actually a great relationship banker. Her name is Z. She's up in Georgetown in Washington, D.C. Shout out to her. She is the best. I don't know if she'll ever watch this video, but if you're in Georgetown, they know how to treat you right. Also, Roger, he's great too. He's over at Merrill Lynch. So both of them are great. But in banking, they actually have a relationship banking strategy, which they want to offer customers a variety of products with the idea that it'll strengthen, right, the customer loyalty and obviously generate more revenue, because banks are in the business of making money, more importantly, turning a profit. So when it comes to building a relationship, there's some key things that's really simple on how you can build that relationship. So the easiest thing is that you want to go ahead and open up a savings and or checking account. Now, I don't know how you feel about certain big banks because they have a lot of fees when it comes to checking and savings account. That's totally up to you. But for the sake of this, let's just go through this and then you can make that decision on your own. So you want to go ahead and start with a checking and savings account. Even if you want to start with a savings account, that's fine. The way you strengthen that relationship is that you start to have direct deposit. Once banks see that money is coming in regularly every 2 weeks, twice a month, whenever you get paid, that's going to strengthen that relationship. Once you get into retirement accounts, your Roth IRAs and your traditional IRAs, usually they have a separate leg who handles that in their wealth management. Now you're looking long term. Now you're actually building assets. You're investing. So that's really where the money is. So if you really wanted to, if you went from a savings account and you had a wealth management account, then that relationship is there because they're going to view you as someone who's going to be there and be with them long term. All right. So here's the strategy. So you have that done. You have that relationship going. And let's say this is going to be over the course of like 90 days at least. OK, so because you have to give it time for at least 1 quarter for them to build some data points on you. Right. So banks build information on their customers. And so if you have a savings account, let's say if every week you just put in $10 into that savings account just so they can see transactions each week over that course of 90 days. Now, not only will you have some money stashed away, but it'll show some activity. Right. Right. So I've also noticed that this strategy is probably going to work better for credit unions than the bigger banks, only because credit unions they're more so for you. They're close knit. The regional banks, the community banks, big banks. Just getting a savings account and a wealth management account might not be no big deal to them, because that's the bare minimum. Once you have 3 or 4 more products, then that's when they consider that a good relationship. Now, just going through my notes here. Okay, so after the 90 days are up and you have been putting money over there each week, okay, $10, $5, but you want something going on every week. Once you get to day 91, day 92, you want to go ahead and make an appointment to speak with a personal banker or relationship banker. Okay, so you make the appointment. Matter of fact, when was the last time you actually went into a bank without any issues just to discuss their services? You understand what I'm saying? You're not going in there with a problem. You're not going in there to cash a check. I just want to know, here's my situation. Here's what I'm looking for. What can you guys offer me, the customer? It's very powerful. That's a little tip for you. But I'll say day 91, day 92, you make the appointment. You go in with a personal banker. You sit down, mask on, the whole nine. And you start talking about their different kind of credit cards, what they have to offer. You're going to talk about their auto loans, mortgages. I mean, I'm the customer. Explain to me all the things. Talk about your wealth management. What kind of credit cards do you have for college students? What kind of starter accounts do you have for like holiday funds or vacation checking accounts? Just ask all these questions. Now, the cool thing about this is that the relationship banker, they have to keep notes of all this. So at the end of the conversation, they have to write this stuff up and document what they talked about, right? So now in your file, it's going to say Mr. and Mrs. such and such stopped by, and these are all the things that we discussed. This is what we offer. Now you're going to start to see more emails come in. Now they're going to say, hey, let me just follow up with you. Have you had a chance to go over such and such and such? Now you got 2 choices. Either you can go ahead and apply for that credit card while you're there, right? Because that was the whole point of this strategy, right? Was to get that first credit card. Or you can let it sit for a couple of days and apply. I find it more useful to apply for a credit card there, and I'll tell you why. Because when you're sitting there at the desk with the personal banker, and you're like, hey, you got 3 different credit cards. I think I'm gonna go for the one that has the cash back 2% all day, every day. They're gonna make that phone call with you there. They're gonna say, hey, this is such and such employee, whatever. I'm here at yada yada yada. I have Mr. such and such. Okay, I'm gonna put the phone on speaker. Boom, go ahead. You just verify some information. They make it happen. That's going directly to the credit card folks who will send it off to the underwriting. The process is so much better than just going online and just doing the automated thing, because now they have your information right there. Okay. So some things to be mindful of though when you're doing this, because banks, they don't like to see, if you coming off the street, even after there's been 90 days, hopefully within that 90 days, you haven't applied for new credit. Okay. So if they pull your credit report and they see that you just applied for a credit card 2 months ago, that doesn't mean that they won't give you a credit card, right? You just want it to look as if since you started this relationship, you haven't been cheating with nobody else, if that makes sense, right? So make sure, if you can, you don't have any new hard inquiries or any new accounts open within those 90 days, right? Now, of course, you want to make sure your credit report is okay. Now, of course, I'm assuming, and I'm going off the assumption that you have at least 640, maybe 640 or above, right? And you don't have any derogatory items. Now, even if you have derogatory items and you have the 640, they might say, hey, this is a new relationship. Here's where we're going to start you off at, right? They may start you with a secure card. I don't know. But that relationship is really what we're going here for. Now, the cool thing about this is that you can do this multiple times over, right? Okay, so here's a tip for you. This money that you've been putting in $10 a week, right, for the last 90 days, once you get this credit card, you can go and open up another checking account the next day, a month later, whatever. You can take half that money out of that savings account, put that into the new account. Instead of putting $10 a week, you're putting $5 a week, and you repeat the same process, right? And again, you can do this every 90 days, 120 days, whatever. You're going to do it once, no problem. But let's say if you don't want to go to a bank, pandemic, the whole nine, right? There's something called double dipping, which kind of bypasses all this, except the same criteria still remains, right? You still got to have a pretty decent credit score. And if you're going to, this double dipping technique, you want to have at least a 720. You really don't want to have anything below that, and you don't want to have any derogatory items. And maybe you don't want to have anything less than 6 months, any new accounts open within 6 months. But it's just, the name kind of speaks for itself. What you're going to do is you're going to go on your computer, you're going to open up Google Chrome, and you're going to go to incognito mode, okay? You're going to open up 2 different bank accounts. Well, it'd be Capital One, and the other one is Chase or Bank of America or whatever, but you're going to have 2 of them going, right? Now, you're going to get to the point where you're getting ready. Your information is put out. They're going to say, within 60 seconds, you can get an answer, right? Sometimes even 30 seconds. You're going to get to the point where you got both tabs ready to rock and roll. And the one that you think that you're less likely going to get, you go for that one first, and then you go to the second one. So the goal is that you open up that window, boom, submit. As soon as that thing starts spinning, next one, submit, boom. Because this technology that we have here, you probably got about a 10 to 15 second window where it's possible, depending on your internet connection, how the stuff goes through, what time of day. I mean, I've even heard stories that it's better to do it at like 2 o'clock in the morning. I don't know how true that is, but I guess when there's less traffic. So they both kind of pull from the same report. So if you can have both companies look at the same report, or as soon as one hits, it hasn't hit Experian yet. So, because you got a 10-second window. So this one check Experian, it pulls the report. This one goes, pulls the report. They got the same report, right? Now, I have heard, again, not sure if it's true, but I have heard that with credit unions, they're a bit slower because of the technology, and you got about a 30-second window. But again, the same process, right? Same technique applies. So make sure you, do your research on your banks. Look at credit unions. I'm a big fan of credit unions, although I'm primarily with Bank of America, right? But if you got some credit unions in mind, also go online and Google to see what people are saying, which banks are pulling for credit cards from which bureaus, right? Because you'll go online and you'll see these fees that says, oh, I just got me a Bank of America card. They pulled from TransUnion. And someone says, oh, Chase, they pulled from Experian. That also can help. So now if you can do it that way, I mean, I'm just giving you just stuff. Look, I mean, I don't know if you're going to do this kind of thing or not. But my point is that you can even finagle it that way so that you can double dip, click, and you want to be incognito mode if you can. Now, you don't want to do more than 2, okay? Because, again, you got that 10-second window. If you try to do 4, the first 2 is going to be good. But then after that, you might get denied. And then you got 4 inquiries. You got 2 good credit cards and 2 you got denied. And then you got 4 hits on your account, whatever. So just look at all this. This is just a way to build the relationship, to extend credit, because once you get these credit cards and you're building that banking relationship, it's going to lead to other things. It's going to lead to that auto loan. It's going to lead to that personal loan. It's going to lead to that mortgage. And, as you get older, and I'm 42, right? So I'm not getting any younger. So that personal banking relationship that I have with Z is extremely important, because whenever I need something, I can just go to her. But just something to think about, okay? Look at it as we're all building something, right? So why not build a banking relationship that'll be financially rewarding for you in the long run, right? All right. So as you know, I hope you found this information useful. Hope you can use it. Do not, don't subscribe. Don't click the like button. Use this information. Share it with someone else. Apply it. And let's all build something together. All right? Later.